What if I told you there's a tiny stock quietly positioning itself inside one of the biggest energy transitions happening right now, a shift that could reshape global shipping for decades, and almost nobody is paying attention to it? Because while most investors are chasing AI hype cycles, smart money is quietly rotating into something far more fundamental. Right now, the world is not just changing because of technology, it is changing because of energy pressure, and this shift is accelerating faster than most people realize. Governments, corporations, and entire industries are being forced to rethink how energy flows through the global economy. Global shipping alone moves more than 80% of world trade. Almost everything you use has been on a ship at some point, but here is the problem: shipping still runs on some of the dirtiest fuels in the world. These fuels are becoming more expensive, more regulated, and increasingly unstable. That is forcing a complete redesign of the shipping industry from the ground up. Regulators across the world are tightening emissions rules, and shipping companies are under pressure to adapt or fall behind. And when a trillion-dollar industry is forced to change its fuel source, that creates one of the biggest investment transitions in modern history. Because every energy shift creates winners and losers. Now, this is where things get interesting. The solution is not just one technology, it is a full ecosystem shift, and one of the biggest solutions emerging right now is LNG. Liquefied natural gas is becoming one of the fastest-growing fuels in global shipping. It burns significantly cleaner than traditional marine fuel and helps reduce harmful emissions at scale. That is why countries are investing billions into LNG infrastructure right now. Ports are upgrading systems, shipping companies are redesigning fleets, and entire supply chains are being rebuilt in real time. But here is the key question most investors miss: if LNG demand is rising, who is actually supplying the fuel, and who is building the infrastructure to deliver it? Because without supply infrastructure, this entire transition cannot function. And that is where the real opportunity exists quietly in the background. Most investors look toward big oil companies or large energy giants, but those companies are already heavily valued and slow-moving. The biggest upside usually comes from smaller niche players positioned early in the cycle. And that brings us to a very specific niche: LNG bunkering. This is the process of refueling ships with liquefied natural gas. It is not widely discussed in retail investing, but it is absolutely essential for LNG adoption. Without bunkering infrastructure, LNG-powered ships cannot operate efficiently at scale. Think of it like building fuel stations for an entirely new transportation system. Without stations, even the best vehicles cannot function. And in this business, location is everything, because bunkering infrastructure must sit in the right ports and shipping corridors where global trade is concentrated. That is why major maritime hubs are becoming extremely important in this transition. Ports across the US, Europe, and Asia are racing to become LNG ready. Now imagine a company positioning itself directly inside that shift, not as a fuel producer but as critical infrastructure connecting supply and demand. That is where asymmetric opportunity begins, because infrastructure plays are about long-term demand, not short-term hype. And that brings us to the company at the center of this discussion. The stock being analyzed today is Galveston LNG Bunkerport Inc., ticker GLVT. This company is focused on LNG bunkering infrastructure development. Its goal is to build facilities that supply LNG directly to commercial ships in high-traffic maritime regions. In simple terms, it wants to become a fueling hub for LNG-powered shipping. Now, on paper, that sounds straightforward, but in reality, it is a complex infrastructure business, requiring permits, engineering capital, and long development timelines. Because you are not just selling a product, you are building part of the global energy system for shipping. And that is exactly why execution is everything for a company like this. Early-stage infrastructure companies live or die by funding partnerships and regulatory success. The market has not fully priced this story yet, because investors are still waiting for real execution proof instead of forward-looking plans. Now let's zoom out and understand why LNG bunkering itself is such a powerful long-term trend. Global energy demand is still rising. Shipping demand is increasing with global trade, and environmental regulations are tightening worldwide. When you combine those three forces, you get a structural shift in how shipping energy works. And LNG is currently the most practical transition fuel available today. Unlike hydrogen or ammonia, which are still developing, LNG is already usable at scale. That makes it the immediate solution for reducing shipping emissions. And that creates strong demand for infrastructure companies that can support LNG logistics, especially in busy shipping hubs. Now coming back to GLVT, the opportunity here is not just LNG itself, it is infrastructure scarcity. There are very few companies building LNG bunkering hubs at scale. That scarcity can create long-term value if demand continues to grow, and the company executes successfully. But we also have to stay realistic. This is still an early-stage company, which means risk is extremely high. Infrastructure projects are expensive, slow, and dependent on approvals. Any delay in funding or construction can significantly impact growth. That is why this type of stock is not considered safe. It is a high-risk, high-reward speculative play. But that is also what makes it interesting, because the biggest returns in markets often come from early-stage infrastructure stories. Now let's break down how a company like this can potentially make money. The business model revolves around LNG fueling services, storage, and bunkering operations. As more LNG-powered ships enter the market, demand for refueling infrastructure increases. That creates recurring usage-based revenue opportunities over time. Think of it like toll-based infrastructure. Every ship that uses the facility contributes to long-term revenue potential. However, this only works if LNG adoption continues to scale globally. If adoption slows, then utilization remains limited. That is why macro trends matter more than company hype. Because even strong companies struggle in weak industry environments. Right now, LNG adoption is still growing, supported by regulations and shipping modernization cycles. That is why investors are watching the sector closely. But it is important to understand timing matters here. Infrastructure stories take years to fully play out, not months. And early positioning is often where the biggest opportunities exist before mainstream attention arrives. On the upside, GLVT could become a strategic LNG hub in a key shipping corridor that would significantly increase long-term value potential. On the downside, delays, funding issues, or slow adoption could limit growth and keep the stock under pressure. So this is not a stock for emotional decision-making. It requires patience, research, and risk management. Smart investors do not just chase narratives. They evaluate execution probability and industry strength together. And right now, GLVT sits in an interesting position. It is not proven yet, but it is operating in a strong macro trend. The real question is not whether LNG will grow. The real question is which companies will successfully build the infrastructure backbone. And that is what makes this story worth watching. Because early-stage infrastructure plays often begin quietly before becoming obvious later. So the key takeaway is simple: understand the macro shift first, then evaluate execution second. Because if both align, the upside can be significant, but if execution fails, even strong trends will not help. So GLVT remains a watchlist candidate, a high-risk, high-reward setup in a transforming global industry. And in markets like this, patience often matters more than prediction, because the biggest winners are rarely obvious at the beginning. They are built slowly as infrastructure catches up with demand, and that is exactly where this story is positioned today.